Hello traders, Gary Wagner here. It is approximately 11:30 in Honolulu, 5:30 in New York. Tuesday, the 12th day of June 2012, and this is the daily report for gold and silver. Very nice showing across the board in the precious metals markets. We'll talk about some of the reasons being cited for this move today. Currently, we have gold trading up about $13 on the day. As you can see, 1610. The high today is 1618 and the low is 1584. Silver up about 39 cents. Current print, as you can see on the screen, is 28.91 with a high of 29.21 and a low of 28.31 on the day. The first chart that I want to look at today is to bring up a chart that we looked at yesterday and briefly talk about that with some of the technical studies that we are seeing right now. 240-minute intraday chart, August gold off of the COMEX. We're plotting Heikin Ashi candles. We are also plotting the moving average convergence divergence, simply called the MACD. We talked about the fact yesterday that when we take a look at this, the MACD, they were really starting to come together. It was about here, but they hadn't crossed at that point. But as you can see right now, you've absolutely gotten that cross, and that's going to trigger a buy signal in terms of the moving average convergence divergence, that particular technical study. When we look at our Heikin Ashi candles, again, this is short term, so we'll look at the daily after, but as you can see, it went to green. We had this sideways activity that corresponds to this area right here in the MACD. But you can see over the last two candles, each candle representing 4 hours, we have gone pretty solid green in the Heikin Ashi. You can see that right in here. No lower wicks. That's a good sign also. Really strong candle previously to this current candle. Traders, I've gone ahead and added to these studies the RSI, Relative Strength Index. You can see that right down here. You look for thresholds at 30 and at 70. You can see that right now it's just past the midway, actually closer towards that 70 than it is the 30. So that is showing us a potential continuation of this uptrend. Traders, we are looking at our daily chart. This is of cash gold. Heikin Ashi format also has a couple of Fibonacci retracement points. First, let's kind of go over where these retracement points are fixed at. We have a very, very long retracement, and that's from 2008 to the record top. Then we have a small one from the record top to the bottom of the first correction, so 1520, 1920 in those two areas. Why is that important? Well, it is going to give us an indication of potential resistance areas and support areas. And we've talked about this a little bit. On the daily charts, based on just the Heikin Ashi, you can see we've got an interesting scenario. We've had that doji-like candle that we look for. Last 2 days are green. That is signaling a pretty solid buy signal. My issue right now is, will that be able to carry us above this really first level of resistance at 1615? You can see we talked about this yesterday. We've gotten close. We actually got an 18 print today, but as you can see, the market is nowhere near there right now. As I said, trading at around 1609. We're going to monitor this market closely because my belief right now, we talked about this, is this triple bottom here, I believe, is absolute support in the market. There are people out there that believe that it might break through, and it certainly might. However, my sentiment right now is that that has held on 3 occasions. It has been tested and proved to be a solid level of support. When we look at the same two studies that we just looked at in our 4-hour chart, this of course is a daily, we see very similar activity or results. First of all, you do have, when we look at the MACD, you do have this line which is just recently crossed. You can see that right here. You also have this market past that 30% threshold and below 70 relative strength index, currently 5181 on the RSI. A nice showing in the equities markets and the dollar index. When we look at that on today's trading activity, you can see that it appears as though, of course, we hit this top up here. We had a series of corrections followed by small little blips to the upside here and then here and also here, and then we also get that here, meaning we're getting this market, although it is trading lower, as you can see, it's trading lower with a series of lower lows, but not with a series of lower highs. That tells me we might develop some sort of a range within the dollar index rather than a defined clear-cut trend as we have been witnessing. Now, in terms of the silver market, nice showing today, just flirting with $29 per ounce. What are we looking at here? Well, again, the Henkin Ashis have gone green. We'll go ahead and blow that up. This 420-minute chart, you can see that they're nice, sizable candles, and more importantly, they have now traded above effectively 28.69, and to me that was a really pretty critical area of resistance. You can see the resistance here really in terms of a triple top in the market. When I say triple top, this is very short term, but I'm just talking about testing it on 3 occasions before it had the ability to plunge above, as we talked about, and then finding resistance at that next level, 29.98. And you can clearly see that it wasn't able to take that out. The market comes back down and dips below this resistance area. And now what we want to do is see, will this become straight support? Will it trade within this particular range here? If so, we know that we have a good range trade, or does it have the ability to really break above that, which right now, technically speaking, there's been nothing that we've seen to indicate that. We're going to monitor this market very, very closely as it goes into the afternoon session here and see if we can position ourselves to the long side. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.